What's up, investors? It's a very exciting day because the screen's going to be white. I'm going to do the account. I'm going to show you all the performances, all the options, all the equities, my investing tab, everything related to my account, and just share some thoughts about the day. So here it is. I'm sitting just over 192. I was down about $700 today. Not too much movement in the markets. I am losing the market today for a change. I think the S&P 500 was up maybe 0.2%. We're going to take a look at that in a minute. But first, before we do all that, let's take a look at these options. So here they are. I'm going to scroll through the screen pretty fast so you can pause the video at any moment to try to figure out the exact positions. The ADRs were actually up. The ADR leaps were actually up here, so that's cool. These are Chinese stocks options, call options, long-term call options. And going on to the equities, Apple actually was what's dragging the account down. If Apple was flat, then it would have had a positive day by about $500. But it decided to drop down 1%. And I think it dragged the entire market with it a little bit, which is fine. Realty income was up 0.3%. Main Street Capital, Goldman Sachs, everything is about even. Smith & Wesson actually was up almost 2%. So that's pretty crazy. Let's click on that and find out what's happening here. So let's see the performance over a week. It's up 6%. 1 month's down 12. So I guess it's kind of bouncing off of a intermediate bottom, I guess. But the downtrend, as you can see, is very much intact if you pull out of the 1-year chart. So that's dangerous. I have both sold puts and calls against the position, which means I'll benefit if it just stays sideways for the time being. Although I do want it to go to 15 so I can get rid of the position. I'm not such a fan of just waiting around anymore. So I want to utilize the money in some other ways. Okay, so those are the positions. Those are the equities, the options, everything. So now, next is the investing tab. The investing tab looks like this. Pretty low margin compared to what I was maybe a month or two ago. I'm sitting at 24.44, which translates to about 48.88% leveraged. You always want to double this number because once the circle gets to 50%, that means you're 100% leveraged. So make sure you understand the difference between the two. So these are my positions in a list sorted by total return, Apple, Main Street, Capital, and then Realty Income. And then by equity, Apple, Main Street, and then Paramount Global. Everything is fairly large now in the account because I only have 5 or 6 positions. Goldman Sachs has now dropped to the bottom of the list, mainly because I had sold, due to an options event, I sold 100 shares at $310 price. And now Goldman Sachs is 324, considerably above that amount. So I was kind of forced to sell 100 shares, which I'm totally fine with. Now I'm sitting on cash. Well, not my cash, but I have buying power of 125,000. So if the market starts dropping, I can start layering that in, whether through options or just buying straight up equity. I don't know yet. Just haven't figured that out. The performance time. I'm going to compare it to the S&P 500. So the 1-day performance, we're just going to look at the regular day, not the after hours amount. The regular day, I'm down almost 0.3%. 1 week, I'm up 3.8. 1 month, up 6.3. 3 months, 16.5 almost. And 1 year is up 15. We're not going to show the all-time chart for now. I'll do it in a little bit. Let's just get the comparison out of the way first. So 1 day, the market wins. So S&P 500 indicated by the SPY, which is an exchange traded fund that tracks the S&P 500. S&P 500 is a collection of the US-based top 500 profitable stocks. They have to be profitable. They need 4 consecutive quarters of profitability in order to be included in the index. If they stop being profitable, they may be dropped from the index for something else. So up 0.1%, up 2.14. So I'm beating on the week, but I'm losing on the day. 1 month is up 1.6, so beating that as well. Up on the 3-month chart, it's actually negative. This is the biggest divergence between S&P 500 and my account. So I think I'm up like, I forget how many percent, like 13 or something. And the S&P 500 is down by 7% almost. So that's a 20% difference. And the same thing for the year chart. I think I'm beating by 25% maybe. Let's see, so down 10% and my account is up almost 15%. So yeah, 25% difference between me and the S&P 500. Major win. Now I'm going to show you the all-time chart. Whenever I do this, I have to specify that I started investing in August 28, 2018. So that's why the chart looks weird. So this is the date where I started investing, somewhere around here, August 28. That's why it looks flat before that, because there wasn't any money in it, just in case you were wondering. So start the chart from here, basically. That's what it looks like. The all-time return is about 163%. So in that's in 4 years. So if you want to go really long term, 163% versus the S&P 500 5-year chart, which is up only 60%. So there you go. 4 years difference, it's about 100% difference. Over 103%. Okay. That's basically it with the review of the account. Now I'm going to share some thoughts. First of all, before I share some thoughts, I've just now started to do some little short clips, posting them on the account. So if you are on a mobile phone and you want to do a vertical view of them, check them out and let me know what you think about them. I just think it's kind of fun. Plus, I think it's a good way to get more people to hear about what's going on here. So let me know if you think they're funny or informative, or I'm wasting my time. But actually, I'm not really wasting my time because it's kind of fun making them. So maybe we'll just make them regardless. Maybe we'll just make them regardless, just to have fun. So that's done. Number 2, I made some, I guess these are like housekeeping announcements. I made some videos about companies. I made a video about AGNC as requested by somebody in the comments. And, I thought that was pretty informative. You can probably figure out what my opinion is of the REIT pretty fast. Now, I actually don't have a very negative opinion of the company. There are just some flags that you may want to check out and understand thoroughly before you invest into a REIT like that. A REIT just means Real Estate Investment Trust, REIT. So that's that. I want to make more company videos. So if you have company in mind that you want me to review, I usually do it on a weekend. Put the ticker symbol of the company or fund or whatever in question that you want me to review down below in the comments. And I'll do a little bit of research. I'll do a little shallow take on it. I'll give you my opinion. We'll run through the numbers. We'll analyze their financial statements quickly, etc., their trends, their product, and even their environment, their line of business, and everything. And if I don't know much about any of those topics, I'll let you know so you can fill out the blanks somewhere else. But that's about it. On the second front, I've been hearing a lot about this kind of like inflation peaking scenario. Now, people have been calling the inflation peak for quite some time, for months now, and it still hasn't happened. And the data seems to completely surprise people by higher and higher inflation. And even if the commodities have taken a bit of a drop, it still doesn't mean that the inflationary scenario is over, right? It just means that the input is down from now on for some of these producers, but they still might overcharge the consumer for goods, for everything, because they need to make up a lot of these squeezes and losses that they've experienced due to increase in input cost. So, the inflation story may not be over for quite some time. So just keep that in mind. Now, traditionally, when it comes to the stock market, it has been an excellent inflation hedge. It hasn't shown that thus far, but if you think about it, when new money is introduced into the economy, what wins? What wins the most is the people who are able to circulate it the fastest. Okay, so those are all the big businesses that exchange money, at a lightning pace. So, and they also have control of the funnel, right? So they can increase prices, they can decrease prices, they can manipulate their money funnel in ways to adapt to the new environment. So actually, stocks are not a bad investment during inflationary times. Other good inflation hedges are physical things like housing, gold, other kind of long-term physical investments, land, and other like agricultural businesses, things like that. So all those are good inflation hedges. So if you're wondering where to park your money, you should do it there. I don't really recommend tips. By the way, none of this is financial advice, of course. I'm not a professional, just a investor just like you. Got to get that disclaimer out of the way. But outside of that, what I wouldn't recommend is buying tips. Now, what tip is an inflation-protected treasury bond, right? So the reason I don't recommend it is because inflation, stated by the they have to determine a level of inflation in order to protect against it, and the inflation determined by the government is intentionally, right, understated. Otherwise, they'd be giving away free money. So they're always going to take the lower bound possible when they're presented with a multitude of figures, and the investor gets screwed. So if you want to invest in bonds but you're afraid of inflation, there's no way out. Don't do tips. That's my tip. All right, on that zinger, I'm going to end it right here. Hopefully make another video tomorrow, and hopefully you guys had a better day than I did. You probably did, because the market is up and I'm down, and Apple was down 1%, so I'm not doing too hot today, but hopefully tomorrow. All right, peace out.